Hello students, lecture 2 from admission of a partner. In present video, I am going to explain about second problem from admission of a partner topic. I am taking this question from Telangana State Telugu Academy Inter Second Year Accountancy Textbook. But this video is useful to all commerce students who want to know about admission of a partner. On admission of a partner, I made 5 videos, part 1 to part 5. These video links are available in the description box. And lecture 1, lecture 2, these 2 videos also I made. That video links also I am providing in the description box. In lecture 1, I explained about third problem. In lecture 2, I explained about first problem. In lecture 3, I am going to explain second problem. Amar and Akbar are partners sharing profits and losses in the ratio of 4:3 respectively. Their balance sheet as on 31st March 2020 was as under: liabilities amount, assets amount. Under liability side, he is giving sundry creditors 20,000 rupees, outstanding expenses 5,000 rupees, general reserve 14,000, capitals of Amar and Akbar are 40,000 rupees and 30,000 rupees. Come to asset side, cash 5,000 rupees, bills receivables 12,000 rupees, debtors 28,000, stock 24,000, machinery 25,000, land 15,000 rupees. Two sides totals are 1,09,000 rupees. Come to the additional information. On the above date, Anthony was admitted into partnership for 1/4 share in the future profits on the following conditions. A. Anthony should bring 35,000 rupees towards capital and 28,000 rupees towards goodwill in cash. B. Land to be valued at 20,000 rupees. C. Machinery valued at 23,000 rupees. D. Stock be depreciated by 10%. E. Provide for bad debts 1,300 rupees. Pass necessary journal entries, ledger accounts and give balance sheet of new firm. He is asking us to prepare necessary journal entries, ledger accounts and balance sheet of the new firm. This is journal for second problem. 1, 2, 3, 4, 5, 6. Total 6 entries we have to write in this problem. In ledger, first we have to prepare revaluation account. This is revaluation account. Capital accounts of 3 partners, Amar, Akbar, Anthony. This is cash account. Next, goodwill account. This is goodwill account. Balance sheet of Amar, Akbar and Anthony as on 31st March 2020. This is new balance sheet. Actually speaking, first we have to prepare journal. We should pass all the journal entries. After that, ledger we have to prepare. But if I explain in that manner, you cannot understand the journal entries. So, ledger accounts and journal entries simultaneously I am going to explain. We will start with the ledger first account, that is revaluation account. Revaluation account is a nominal account. So while preparing revaluation account, nominal account rules we have to follow. Nominal account rule is debit all expenses and losses, credit all incomes and gains. Gain means profit. In revaluation of assets and liabilities, when loss comes, if asset value is decreasing or liability value is increasing, then loss comes. If asset value increases, liability value decreases, then profit comes. What is revaluation account? What is the meaning of revaluation of assets and liabilities? All these points I explained in lecture 1. Problem number 3. Link is available in the description box now. In iCard also I will leave this link. I request you to watch that video first. Then only you can understand this present problem. B, C, D, E. These 4 points are related with revaluation account. Come to B point. Land to be valued at 20,000 rupees. In old balance sheet, land value is given as 15,000 rupees. In old balance sheet, land value is given as 15,000 rupees. And in adjustments, he is giving that market value of the land is 20,000 rupees. So in revaluation of land, old partners came to know that market value of land is increased by 5,000 rupees. So asset value is increased by 5,000. It is a profit. So credit side we have to write that. With buy we have to start. Asset name land. So buy land account. How this 5,000 rupees coming? Market price 20,000 rupees. Book value nothing but the value which is shown in old balance sheet is 15,000 rupees. Difference 5,000 is profit to us. CBIT, machinery valued at 23,000 rupees. In old balance sheet, machinery value is given as 25,000 rupees. In old balance sheet, machinery value is given as 25,000 rupees. Book value of machine is 25,000. At the time of admission, old partners inquired in the market. They came to know that now machinery value is 23,000 rupees only. So asset value 25,000 as per books, but market value is 23,000 rupees. So machinery is reduced by 2,000 rupees. This 2,000 is lost to us. When asset value decreases, it is loss. Machine is an asset. Therefore, debit side we have to show this. 2. Machinery account. Book value 25,000 rupees. Old balance sheet value 25,000 rupees minus market price 23,000 rupees. In amount column 2,000. Debit. Stock be depreciated by 10%. In old balance sheet, stock value is given as 24,000 rupees. In old balance sheet, stock value is given as 24,000 rupees. And in adjustments, he is giving that stock is to be reduced by 10%. So, asset value is decreasing. It is a loss. It should be debited to stock account. Stock value 24,000. 10% of 24,000 is reducing in revaluation. So, 2,400 is the loss. E. Provide for bad debts 1,300 rupees. Bad debt provision is related with the debtors, no? Debtors amount is 28,000 rupees. In old balance sheet, debtors value is given as 28,000 rupees. And in additional information he is giving that we have to provide 1,300 rupees towards provision for bad debts on debtors. Means in revaluation of assets and liabilities, old partners came to know that out of 28,000 rupees, for 1,300 rupees there is doubt. 1,300 may come, may not come. So old partners want to provide a provision for bad debts with that 1,300 rupees. Now we cannot say that our debtors value is 28,000 rupees. Because in 28,000 rupees, for 1,300 there is some doubt. Therefore, 1,300 is to be deducted from debtors value 28,000 rupees. So, debtor is an asset. Asset value is reduced by 1,300. This is loss. It should be debited. But don't write debtors word. You have to write provision for bad debts. As amount is directly given, we can write that in amount column. You need not to calculate PBT value. It is directly given in the question. So related to revaluation account, all adjustments we have considered. Finally, we have to observe which side total is more. Debit side total is more than credit side total. In rough notes, write down the debit total first. 5,700 minus credit total 5,000. Difference is 700. What is the meaning of this answer? Debit side we wrote losses. Total loss is 5,700. Total profit is 5,000. So in revaluation of assets, observe here, liability is not revalued. Only assets are revalued. In this revaluation of assets, there is a loss of 700 rupees. Who should bear this loss? New partner is not going to bear this loss because this loss is erased before his admission. So, old partners have to bear this loss. In which ratio? in old profit and loss ratio. As credit total is less, credit side you have to transfer this loss to old partners capital accounts by Amar capital account, by Akbar capital account. Revaluation loss 700 rupees. In old ratio, no? In question, he is giving that Amar and Akbar are partners sharing profits and losses in the ratio of 4:3 respectively. 4:3 is the old ratio of Amar and Akbar. So for first person, Amar, 4/7. How 7 is coming? Old ratio 4:3. 4 number belongs to Amar, 3 number belongs to Akbar. 4 plus 3, 7. Now for Akbar, 3 no? 3/7. 400 rupees, 300 rupees. Put the total 5,700. So in revaluation of assets, there is a loss of 700 rupees now. Out of that 700, Amar should bear 400 rupees and Akbar should bear 300 rupees. Debit side also write down the total 5,700. This is revaluation account. Now come to journal entries. Related with the revaluation account, 3 entries we have to pass. First entry is for machinery, stock, provision for bad debts. 3 assets, machine, stock, debtors are reducing. This is loss. For that loss, we have to write the first entry. In revaluation account, debit side, we posted these 3 accounts names. Therefore, we should pass the entry where revaluation account should be debited and these 3 accounts are to be credited. So the first entry in journal is revaluation account debtor to machinery account, to stock account, to provision for bad debts account. Revaluation account debtor to machinery account, to stock account, to provision for bad debts account. First credit amounts we have to write because we credited more than one account. In credit column, write down the amounts first. From where you will get these amounts? In revaluation account debit side, we calculated these amounts. In debit column, add these 3 amounts and put the total. Come to narration. Machinery, stock and debtors. These 3 assets are reduced here and it is a loss. So for that loss, we wrote this entry. Mention that being the entry for loss in revaluation of assets. Second entry is for land. Asset value increased. So for this profit, we have to write second entry. In revaluation account, credit side, we wrote land. If you want to post like that, in journal entry, revaluation account should be credited and the land account should be debited. So the entry is land account debtor to revaluation account. Land account debtor to revaluation account. From revaluation account credit side, we have to take this amount 5,000, 5,000. Narration. Land is an asset. Asset value increased. It is a profit. For that profit, we are writing this entry. Mention that in the narration. Being the entry for profit in revaluation of asset. Third entry is for distributing the loss to old partners' capital accounts. Once you recollect previous 2 problems, problem number 3, problem number 1, lecture 1, lecture 2. In those 2 videos, in revaluation account, profit came. So debit side, we distributed that revaluation account profit to old partners' capital accounts. And in journal, we wrote revaluation account debtor to old partners' capital accounts. But in present problem, instead of profit, we have loss. We credited partners' capital accounts in revaluation account. If you want to post like this, reverse entry we have to pass. In case of profit, we used to debit revaluation account now. In case of loss, as these 2 capitals are shown under credit side of revaluation account, we have to credit revaluation account in journal entry. And we should debit these 2 members' capital accounts. So the entry is Amar capital account debtor, Akbar capital account debtor to revaluation account. So this is the entry for revaluation loss. Amar capital account debtor, Akbar capital account debtor to revaluation account. Amar capital, Akbar capital, 400 rupees, 300 rupees. From revaluation account credit side, we have to take these amounts. For revaluation account, write down the total, 700. So narration is, in revaluation of assets, there is loss. That loss we are transferring to old partners capital accounts in old profit and loss ratio. Mention that being the loss in revaluation of assets is transferred to old partners capital accounts in old profit and loss ratio. With this, revaluation account is completed. In ledger, first account is completed. Now come to second account, that is capital accounts of all the three partners. Capital accounts of all the three partners, Amar, Akbar, Anthony. We have to start capital accounts with opening balance. From where we have to take this opening balance? In old balance sheet, under liability side, he has given capitals of Amar and Akbar, no? 40,000, 30,000. These two amounts we have to write here. Credit side, we have to write this opening balances. By balance brought down, 40,000, 30,000. As new partners capital is not given in the old balance sheet, for Anthony, we should not write anything. Next come to revaluation account. In revaluation of assets, there is a loss of 700 rupees. We transferred this loss to old partners capital accounts in old profit and loss ratio. Now we are preparing capital accounts now. In journal entry, as capital accounts are debited, in capital account debit side we have to post this entry. What to write in particulars column? Other side, credit side, we wrote revaluation account now. Write down that. To revaluation account, in Amar capital column 400 rupees, in Akbar capital column 300 rupees. Debit side to revaluation account 400, 300. Next we have to observe the balance sheet liability side, whether accumulated profit is given or not. There is one accumulated profit, general reserve 14,000 rupees. This amount we should transfer to old partners capital accounts in old profit and loss ratio. In 4:3 ratio, we have to transfer this 14,000 rupees to Amar and Akbar. General reserve account debtor to Amar capital to Akbar capital. Recollect previous problems? If we get revaluation profit, to transfer that to old partners capital accounts, we used to write revaluation account debtor to Amar capital to Akbar capital. In the same manner, if you want to transfer general reserve, in the place of revaluation account, you have to debit general reserve account. General reserve amount 14,000 is given under liability side of old balance sheet. This 14,000 to these two old partners we have to distribute in old ratio. Mention that as a narration. Being general reserve is transferred to old partners capital accounts in old profit and loss ratio. As we are preparing capital accounts, we have to observe whether capital accounts are debited or credited. In this entry, capital accounts are credited. Therefore, this entry we should post on credit side of capital accounts. What to write in particulars column? Other side, debit side, we wrote general reserve now. Write down that. By general reserve account. In Amar column, 8,000 rupees. In Akbar column, 6,000 rupees. By general reserve, distribute that general reserve amount to old partners capital accounts in old profit and loss ratio. Next come to capital and goodwill. New partner Anthony, when he is admitted, he brought capital and goodwill. For that we have to write the entry now. A point, Anthony should bring 35,000 rupees towards capital and 28,000 rupees towards goodwill in cash. This point is related with capital and goodwill adjustment. Accounting treatment of goodwill. In case of admission of a partner, to adjust the goodwill, there are three methods. First method is premium method. Second one, revaluation method. Third one, memorandum revaluation method. How to identify that? Goodwill is to be adjusted as per premium method. In case of premium method, when new partner is coming into the business, he brings two things, capital, goodwill. In present problem also, when Anthony is admitted in the firm, Anthony is bringing capital and goodwill both. As these two amounts are brought by the new partner into the firm, in present problem, we have to adjust the goodwill as per premium method. Premium method is subdivided into three methods. When goodwill is paid privately, when goodwill is retained in the business, C is when goodwill is withdrawn by the old partners. See the goodwill adjustment. Anthony should bring 35,000 towards capital and 28,000 rupees towards goodwill in cash. And related with goodwill, there is no other information. He is not giving that goodwill should be paid privately. Therefore, it is not premium A. He is not giving that this goodwill is to be withdrawn by old partners. Therefore, it is not premium C. Then what is left? Premium B. New partner is bringing goodwill. That goodwill we are transferring to old partner's capital accounts in sacrificing ratio. After that, they want to retain this goodwill in the firm only. Let us see what are the entries in this method. First entry is Anthony is bringing capital and goodwill in cash. Cash is coming from Anthony. Think from firm's point of view. To the firm, cash is coming from the Anthony. So cash account we should write or bank account we should write? Observe the old balance sheet. In question he has given cash balance and bank balance is not given. Therefore cash account we have to take as one account. Cash account is one account. Anthony is bringing this cash. Therefore, Anthony account is second account. Take goodwill as third account because Anthony is bringing goodwill also. Now, cash account. Cash is an asset. All assets come under real accounts. So, cash account is a real account. Anthony, with the person name we opened this account. It is a personal account. About goodwill I will explain later. Now apply the double entry principles. Real account rule. Debit what comes in, credit what goes out. From Anthony, cash is coming into the firm. As cash is coming, we should debit cash account. Then personal account rule. Debit the receiver, credit the giver. Anthony is giving capital and goodwill to the firm. Anthony is a giver. Therefore, we should credit Anthony account. So, in journal entry, cash account we should debit, Anthony account we should credit. As Anthony is the owner, owner's name we don't write. Instead of owner's name, we have to write capital word. But there are three partners. If you simply write capital word, there is no clarity here. This is the capital of whom? Amar, Akbar or Anthony. For more clarity, we add new partner's name also. Anthony's capital account. Now the final entry is cash account debtor to Anthony capital. Even goodwill account also we have to credit. As credit side two accounts are there. First credit amount you should write. Anthony brought 35,000 rupees as capital. Anthony brought 28,000 rupees towards his share of goodwill. Now, these two amounts you have to add and for cash you have to debit 63,000 rupees. Now the doubt is why goodwill account is credited. Related with cash account and Anthony account there is clarity. Cash is coming, therefore cash account is debited. Anthony is a giver, therefore Anthony account is credited. Why goodwill account is credited? Because new partner brought goodwill into the firm. This is not an asset to the firm. This goodwill amount firm should return to old partners. So to the firm, this goodwill amount is a liability. because firm has to pay this amount to old partners. As it is a liability and liability shows a credit balance, we are crediting goodwill account here. Cash account debtor to Anthony capital account to goodwill account. Anthony brought 35,000 rupees as capital. For Anthony capital, write down 35,000 rupees in credit column. Anthony brought 28,000 rupees towards goodwill. So for goodwill in credit column show that 28,000 rupees. Add these two amounts and for cash write down 63,000 rupees in debit column. Come to narration. New partner is bringing capital and goodwill now. Being new partner brought capital and his share of goodwill. Now we are preparing capital accounts. Observe capital account is debited or credited. Anthony capital account is credited. Therefore, in capital accounts, credit side we have to post this entry. What to write in particulars column? Other side, debit side. We wrote cash account now. Write on that. By cash account. But don't write 63,000 rupees. In capital account we are posting this entry now. Therefore, in Anthony column, 35,000 rupees. Anthony capital we have to write. By cash account. In Anthony column, 35,000 rupees. Now come to second entry related with goodwill. New partner brought goodwill into the firm. This goodwill we should transfer to old partner's capital accounts in sacrificing ratio. Further, the entry is goodwill account debtor to Amar capital to Akbar capital. Why goodwill account is debited here? In first entry, we created one liability by crediting goodwill account with 28,000 rupees. As this goodwill is transferred to old partners capital accounts, now this liability account is closed. We credited and we created this goodwill liability. If you want to close this liability, we have to debit it with the same amount. And this goodwill amount to partners capital accounts, we are transferring now. Partners capital accounts show a credit balance because capital is liability and we are adding some more amount to that liability. So liability increases, liability shows a credit balance. If you want to increase that liability, again you have to credit that liability account. We want to increase capital accounts of old partners because this goodwill shares also we are adding to their capitals. Therefore, capital accounts are credited. Now this goodwill amount, in which ratio we have to distribute to old partners? Recollect previous problem, that is problem number 1. In that problem, clearly I explained about sacrificing ratio. So, in sacrificing ratio, we have to distribute this goodwill. Related with sacrificing ratio, what I explained in that problem, if old ratio and a new ratio both are given in the question, then sacrificing ratio is to be calculated by using one formula, old ratio minus new ratio. If new ratio is not given in the question, only old profit and loss ratio is given. In that case, sacrificing ratio and old ratio both will be the same. Why like that? Proof also I explained in problem number 1. In question, old ratio is given 4:3 and there is no new profit and loss ratio. As new profit and loss ratio is not given in the question, old ratio becomes sacrificing ratio. 28,000 rupees in 4:3 ratio we have to distribute. Old ratio is 4:3 now, sacrificing ratio is also 4:3. In 28,000 rupees, 4/7 share we should give to Amar and 3/7 share we have to give to Akbar. 4,000 into 4, 16,000 rupees. 4,000 into 3, 12,000 rupees. Goodwill account debtor to Amar capital account to Akbar capital account. Goodwill amount 28,000 rupees. We are transferring to old partners capital accounts in sacrificing ratio. Being goodwill is transferred to old partners capital accounts in their sacrificing ratio. Now we are preparing capital accounts. As capital accounts are credited in the journal entry, in capital accounts, this entry we have to post on credit side. What to write in particulars column? We debited goodwill account now, write down that. By goodwill account, in Amar column 16,000 rupees, in Akbar column 12,000 rupees. By goodwill account 16,000, 12,000. See, by using journal entries, we posted all adjustments in capital accounts. Suppose journal entries we are not preparing. Without using journal entries, how to post the transactions in capital accounts? For that, you have to remember that capital account is a personal account. Because instead of owner's name, we write capital word. Personal account rule is debit the receiver, credit the giver. Means, if partner is receiving any benefit from the firm, then that transaction we have to write on debit side of capital account. If partner is giving any benefit to the firm, that transaction we have to write on credit side of capital account. Same point in another manner also I will tell. If partner is receiving any benefit, debit side we should write now. Suppose partner is retiring, then the benefit which he received previously, now he has to return to the firm. So, debit side, the amounts which partner should return to the firm at the time of retirement, we should show. Similarly, credit side, the amounts which firm has to return to partner, we should show. Because partner is a giver for all these amounts. So when partner is continuing in the business, partner has given all these amounts to the firm. If partner is retiring, firm should return these amounts to him now. So all those amounts on credit side they appear. In that manner also we can post these transactions. Now posting is completed. Next step, balancing. As credit side amount columns total is more than debit side amount columns. In rough notes, credit totals first we have to find out. For Amar column, credit total is 64,000 rupees. For Akbar column, credit total is 48,000 rupees. Anjaneya, credit column total is 35,000 rupees. Minus debit total. For Amar, 400 rupees. Akbar, 300 rupees. For Anthony, nothing. 64,000 minus 400. 63,600. For second person, 47,700. For third person, same, 35,000 rupees. Now, these amounts, as debit total is less, debit side we have to write. 2. What to write? This is balance carried down now. Balance carried down. In Amar column, 63,600. In Akbar column, 47,700. For third person, Anthony, credit total becomes balance carried down. Now put the total. Two sides totals are 64,000, 48,000, 35,000 rupees. Capital accounts are completed. Next we have to prepare cash account or bank account. Now the doubt is which account we should prepare, cash account or bank account. See the balance sheet asset side. Cash balance is given 5,000 rupees but bank balance is not given. Therefore, in present problem we have to prepare cash account. We should not prepare bank account. We have to start this cash account with the opening balance. From where we have to take this amount? In old balance sheet under asset side, cash balance is given of 5,000 rupees. This amount we have to take. Write down the opening balance on debit side. To balance brought down 5,000 rupees. Now the doubt is why we are showing opening balance on debit side? Because cash is an asset. All assets show a debit balance. Therefore, debit side we have to show the opening balance. Next, we have to observe in journal entries related with the cash, is there any entry? Observe journal entries related with cash account. This fifth entry we wrote. Cash account debtor to Anthony capital account to goodwill account. Observe cash account is debited or credited in the entry. Cash account is debited. Therefore, in cash account debit side we have to post this entry. What to write in particulars column? Other side, credit side. We wrote these two accounts now. Write down these two accounts names. To Anthony capital 35,000 rupees. To goodwill 28,000 rupees. To Anthony capital 35,000 rupees. Anthony is bringing 35,000 rupees capital. To goodwill, Anthony is bringing 28,000 rupees towards goodwill. Only one entry we have, that entry we have posted. Posting work is completed. Next, balancing. There is no amount on credit side now. Therefore, debit total becomes balance carried down. Debit total is 68,000 rupees. Same amount in credit side you have to write by balance carried down 68,000 rupees. Here also write down the same. Cash account is completed. Next we have to prepare goodwill account. Goodwill account. First we have to observe whether any opening balance is given for goodwill. Where he gives this opening balance? In old balance sheet under asset side he may give this opening balance. Observe the old balance sheet under asset side, goodwill amount is not given. Means there is no opening balance for goodwill. As there is no opening balance for goodwill account, we have to start this account by posting the last two entries. In journal entries, last two entries, fifth entry, sixth entry are related with goodwill. Let us see the fifth entry. Cash account debtor to Anthony capital to goodwill account. Now we are preparing goodwill account. As goodwill account is credited in the entry, in goodwill account credit side we have to post this entry. What to write in particulars column? Other side, debit side. We wrote cash account now, write down that. By cash account, but don't show 63,000 rupees. We are preparing goodwill account now. So goodwill amount 28,000 rupees you have to write. By cash account 28,000 rupees. Goodwill account debtor to Amar capital account to Akbar capital account. As goodwill account is debited, in goodwill account this entry appears on debit side. What to write in particulars column? Other side. We wrote Amar capital, Akbar capital now. Write down these two amounts. To Amar capital account 16,000 rupees. To Akbar capital account 12,000 rupees. To Amar capital account. In total goodwill 28,000 rupees. Amar's sacrificing share is 4/7. 4,000 into 4, 16,000. Second partner to Akbar capital account. In total goodwill, Akbar's sacrificing share is 3/7. 4,000 into 3, 12,000 rupees. Posting is completed. Next, balancing. Two amount columns totals are same. Means goodwill account is closed. There is no balance carried down in goodwill account. Put the totals. So remember, under premium method, B bit, that is goodwill retained in the business, goodwill account should get closed like this. You should not get any balance carried down in goodwill account. As goodwill account is closed, in new balance sheet under asset side, we should not show goodwill amount. With this, ledger is completed. In ledger, we prepared the revaluation account, capital accounts of all the partners, cash account and goodwill account. Next, we have to prepare new balance sheet. Balance sheet of Amar, Akbar and Anthony as on 31st March 2020. As we have included new partner's name also, this is called new balance sheet. It contains the details of all the three partners. Based on the old balance sheet and additional information, we have to prepare the new balance sheet. One by one, we have to observe these amounts. Related with this amount, If any additional information is given, by adjusting that, we have to take the net value in new balance sheet. Related with these liabilities and assets, if there is no additional information, then this asset or liability value as it is we have to show in new balance sheet. Let us start with liability side. Sundry creditors 20,000 rupees. Related with sundry creditors, there is no additional information. As adjustment is not given, sundry creditors 20,000 in new balance sheet liability side directly we have to show. Liability side, sundry creditors 20,000 rupees in amount column. Next come to outstanding expenses 5,000 rupees. Related with outstanding expenses, there is no additional information. Therefore, in new balance sheet under liability side, outstanding expenses 5,000 directly we have to take. Under liability side, outstanding expenses 5,000 rupees. Next come to general reserve. As general reserve account we have closed by transferring its balance to old partners capital accounts, in new balance sheet under liability side, we should not show this general reserve amount. After taking these liabilities, we have to observe adjustments also, whether any additional liability is given in the adjustments or not. There is no additional liability. Therefore, directly we can write the capital accounts now. Capital accounts of Amar, Akbar and Anthony. Capitals. Which amounts we have to show here? As capitals, we should not write this 40,000 rupees, 30,000 rupees here. In capital accounts, we got answers now, balance carried down figures. These three amounts we have to show here. You can show the three amounts in inner column. Total you can write in amount column. Otherwise, directly you can write these three amounts in amount column. I am directly writing the amounts in amount column. Amar capital 63,600 rupees. Akbar capital 47,700 rupees. Anthony capital 35,000 rupees. Liability side completed. Now come to asset side. Cash 5,000 rupees. Don't show this 5,000 rupees in new balance sheet. Which amount we have to show for cash? Cash. In cash account, we got answer no balance carried down 68,000 rupees. This amount we have to show. So write down 68,000 rupees. Next, bills receivables 12,000 rupees. Related with the bills receivable, there is no additional information. Therefore, in new balance sheet, bills receivable value as it is we can write in outer column. Bills receivable. As there is no adjustment, 12,000 rupees directly in amount column. Next come to debtors. Debtors value 28,000 rupees. Related with the debtors, adjustment number E. Provide for bad debts 1300 rupees. As adjustment is given, provision for bad debt is given, debtors amount showing in inner column. PBD we have to deduct minus provision for bad debts. It is given in the adjustment only 1300 rupees. Deduct that amount. Net amount in outer column. Next come to stock 24,000 rupees. Related to stock, there is one adjustment debit. Stock be depreciated by 10%. For stock, there is an adjustment. Therefore, stock value write down in inner column. Adjustment is provide depreciation at the rate of 10%. In revaluation account, debit side we calculated now 2,400 rupees. That we have to deduct. Then the remaining amount in outer column 21,000 rupees 600. Next machinery 25,000 rupees. Related with machinery, there is one adjustment. CBIT. Machinery valued at 23,000 rupees. Machinery, its book value is 25,000 rupees and its market value is 23,000 rupees. Means machinery value is reduced by 2,000 rupees. This 2,000 we have to deduct from 25,000 rupees. And what to write for that? Depreciation. Now the machine value is 23,000 rupees only. Next, land. Land 15,000 rupees. Related with land, there is one adjustment. BBIT. Land to be valued at 20,000 rupees. Land. In old balance sheet, land value is given as 15,000 rupees. And in revaluation of assets, old partners came to know that market price of land is 20,000 rupees. So land value is increased by 5,000. This 5,000 is called appreciation. Add that appreciation value to the book value. Show the market price of land here, 20,000 rupees. Observe one point, we are not written goodwill amount here because this is premium B method. New partner brought goodwill, that goodwill is retained in the business. Recollect goodwill account under this method, goodwill account is closed. There is no balance carried down amount in goodwill account. As goodwill account is closed, goodwill doesn't appear in new balance sheet under asset side. With this, admission of a partner, second problem is completed. Hope this video is helpful to you. Thank you.